Hi guys, it's Sunday the 13th of October 2019. I'm going to give you a technical analysis breakdown of some UK and US stocks. And also in this video, I'm going to be covering some ETFs and why I'm changing my strategy for the next couple of weeks. Let's get straight into it. Hi guys, it's Any, aka the Noctrader, your friendly neighborhood swing trader, back again with another video. Remember to hit that like button, hit that subscribe button, and hit that alert button to get alerts on all my latest videos. I've got Facebook, Twitter, and Instagram at the Noctrader on all social media platforms. And if you check the description section below, you'll see a link to my mailing list and my chat room, my Discord group called Pip Talk, where it's just a community of for like-minded traders and investors to talk about everything and anything to do with trading and investing. Now, in this video, I'm obviously going to do a technical analysis breakdown, but before I get into that, I want to talk to you about why I'm slightly tweaking my strategy for the time being. Now, what I've seen is that there's been a lot of news, as we know, since about, I'd say July to now, which is October. Technical analysis, swing trading has been quite hard, primarily because you catch a pattern, you see a pattern, and then if you wanted to take advantage of this pattern, a lot of times there'll be a lot of fundamental news that would throw the technical analysis off. Now, this can happen at any time period, but this has been happening very frequently because of the Trump administration. So, and the stuff going on with the China trade war. Every time I would identify a pattern that I could take advantage of, some sort of news would come out about Trump has decided he wants to be more aggressive with tariffs. Then he's going to scale back tariffs. Now they're having talks. Now they're looking positive. Now it's looking negative. Now it's looking positive again. And all these kind of different news surrounding the US-China trade war has really just sent the market in a frenzy. And it's great volatility for short-term traders like day traders. But for swing traders who are trying to hold positions for weeks, you can find a nice pattern, and then that pattern can be broken because of some sort of news that's happened on that day about the trade war with China. And this can happen infrequently, but this was happening so frequently that in any sort of pattern that you can identify, there was no real stability in this pattern, and you can never really take full advantage of it and hold it for a couple of weeks, because you don't know what was around the corner today, tomorrow, the next week about what sort of news that would break that pattern. So with that being said, I've decided to slightly tweak my strategy. I'm still a swing trader, I'm not a day trader, but I've realized that the only really real way to take advantage of some of these trades is to take shorter positions. So rather than looking for maybe the 1 week to 4 week holds, I'm now looking at shorter either day trades, so intraday trades, or potentially holding for a couple of days, so maybe a week, nothing more than that, because then you can get in and out of your positions without too much fundamentals affecting your trades. It still could happen, but there's more likelihood you can just get your quick wins without being affected by externalities. So with that being said, let's get straight into it. So this is my general watch list. You know this, guys, by now. Everyone that watches my technical analysis report videos on a daily basis will see my watch list, and I normally don't really change it too much. I've changed it here and there over the time, but I haven't really done too much changes. But I've actually created another watch list, which is just ETFs, and I'm going to be trading those a bit more frequently recently. Actually, because there's lots of opportunities to be made right now in the ETF market. So I've got this list. So this is what the ETFs that I've been looking at. As you know, the yellow color coded are the ones that I'm proactively watching, and the purples are the ones I'm proactively going to trade. Now, over the last week, there's been some good news, but especially in the equities market, because if you look at FinViz, you can see that all of the major indices over the last week have been doing pretty well. Dow Jones, S&P 500, Nike, DAX, and this is all because of potential trade talks. Trade talks looking good, so it's really pushed the market up a little bit over the last week. Now, for the ETFs that I'm looking at right now are JDST, JNUG. What you need to know about ETFs is that they come in pairs. So JDST and JNUG are inextricably tied. Well, they're tied together because JNUG and JDST are inversely correlated. So when JNUG goes up, JDST goes down. When JDST goes up, JNUG goes down. And they're inversely correlated together because they hold they track gold mining stocks. So let me actually find the stocks that they track. So here's some information on JDST and JNUG. They're a triple leveraged ETF that track gold mining stocks. So what that means is that whenever these are the top 10 weighted stocks that they track. So this is their weighting. So Northern Star 6%, Evolution Mining 5%. So these are all just gold and mining stocks, and they're batched together and they're weighted, and they create this ETF. Now, so you can look at this on this website here, and they're triple leverage. So whenever the amalgamation of all of these stocks goes up by 1%, JNUG will go up by 3%, and JDST will go down by 3%. So they're inversely correlated to each other, and they're triple leverage, so they move 3 times what the amalgamation of these weighted stocks move. So with that information, I did some technical analysis on JDST and JNUG, and if you look at this 4-hour chart, I'm not going to go into depths in here because I've actually just made a video on this today. If you want to check that video out, I actually go through how I came to this conclusions, but it's through confluence. So basically, all of this, everything I saw here told me that this would be a short because of all the different technical analysis I did. If you want to see me go into depths about that, check that confluence video. It was my last video that I just made. Now, because JNUG is going down, that means JDST is going up. And this strikes opportunity to go long. Well, obviously most of the move has been made already, but it shows that this is going long and it could potentially go up further, because as you can see here, from this bottom to this top, from this base to this top, that was 9 days, 700 pips. 5 days, 500 pips. So far, it's only been 3 days, 200 pips. I reckon it's got maybe 2-3 more days to go up further. So that's a potential long as well. But the position I'm in right now is so NUGT is inversely correlated to, what's it inversely correlated to again? Is it dust? Yes, inversely correlated to dust. Yeah, and it's another gold mining stock, and I've done the same thing here. I've actually taken a long position in this already. If you follow me on Twitter, or if you're in the Discord group, you'll see that I posted about this a while back, and we're in a great position right now. Same kind of formation as JNUG, JDST. Dust is also a gold triple leverage ETF. Now, what I saw that made me want to take this long position was I saw a kind of bullish divergence happening. So what that means is that right now it was in like almost like a channel pattern, and then it broke out of the channel pattern, consolidated back on made the old resistance a new support here, and then it started making higher highs. But what I saw is that it was kind of like, almost like a cup formation here. So if I go down into 4-hour chart, I realized that it was ebbing and flowing, and what I was waiting for was here for it to come back down to this resistance line, support line, and then take advantage of it and go long here, because then you'd have a beautiful risk to reward. Right now my risk to reward is kind of ridiculous. Right now I'm only risking £29 because I've moved up the stop loss, and it's just I can see it keep on climbing. So right now I'm hoping to make about 800 quid on this trade, which is a great risk to reward ratio. My the initial place I set the stop loss when I entered this trade was about here, so it would have been about 70 pounds. So 70 pounds to 800, that's still pretty much like a 9-to-1 risk to reward ratio, which is really good. So yeah, so it was a as you can see here, I was making a little bit of a cup formation, and all these green arrows is where a good long position could be taken. Now the reason why I set my my profit zone around here was it's quite speculative, but I used this kind of ruler tool. So here to here, once again, that was about 9 days, 300 pips, 6 days, 227 pips. So I reckon about 6-7 days, 270 pips, because I believe that this bullish run is going to be a little bit higher than this one, and this was 6 days, 227. So even if it just does the same, 6 days 227, it'll be around here, but I think it's going to go a little bit higher. But anyway, I'll just keep moving stop loss according, and then we'll just see where it is. If it carries on next week up, then I'll just move to stop loss above my entry point, and then it will just be green territory from here. Now, if you also look at the MACD and RSI, all showing good signs, all showing bullish signs here on the 4-hour chart. What's also quite interesting is that if you go down into a 1-hour chart, this is where it gets really interesting. Here was a falling wedge. I've made a video about wedge formation if you want to know how to trade a wedge formation. But so I entered a long here mainly because what you really want to see is that it entered the falling wedge from a bullish position. So that means it broke into it, started selling off into a falling wedge, and I saw, okay, at this point it's going to break out. It broke out, came back down, consolidated against the old resistance line of the wedge as a new support, then started climbing. So I believe that this is going to carry on climbing, and I'll just carry on moving my stop loss in accordance and just see where this goes. And to be honest, this is a great trade because you can make quite a lot in a short space of time because of the type of ETF it is. A triple leveraged ETFs move quite a lot in a short space of time because they're triple leveraged, so that, as I said before, when the amalgamation of all the stocks within that ETF move by 1%, the ETF moves by 3%. So it's always going to have that kind of volatility that you need to make good trades. But also you have to be wary because it can go up really fast, it can also come down really fast. So you have to really manage your risk here. Like, my risk is managed well, so that now I'm happy in this trade because I'm risking £29 to make about £800. Hopefully, we'll see how that goes. And then another ETF that I'm looking at right now is UGAZ and DGAZ. They were inversely correlated as well, similar to the other ones. They're a triple leverage ETF for natural gas. A lot of people like to trade this as well. As we all know, we're coming into winter, so that means that gas consumption is going to be a lot higher. And as you can tell, because it's a gas ETF, it's quite cyclical in nature, just because of the consumption of gas is cyclical as well. But from a technical aspect, UGAZ, let's look at UGAZ, which is the bearish ETF. If you go to the 2-hour chart, let me go to the 2-hour chart. Let me go to the 4-hour chart actually. Let me go to the daily chart. So UGAZ, let me, as you can see here, this line, I drew this line recently, and this line is a previous support. It's been a support here, it was a resistance here, but it's a support here. It's double bottomed here, and I believe this is going to kind of break out now. It's double bottomed on this line, which is a previous support, and I believe it's going to start going up now again. So this would be a great position to enter a long position at. If I kind of dwindle down into a shorter time frame, you can see here, yeah, this double bottom, I believe this is going to be a great place to take a long position here. Primarily from the technical aspect, and also just because of the cyclical nature of the natural gas consumption. And lo and behold, on the inverse ETF, it's the same thing but the opposite way around. So if you go on the daily chart, you'll see that it looks like it could potentially sell off now, because it was a previous support here that's become a resistance, and it's double topped at here, and it looks like it's gonna start selling off. But just gonna keep an eye out for that. Either way, even if I'm wrong, this is a great position to take, just because of the for you guys anyway. Let me go back to you guys. It's a great position to take just because of, like, remember the risk to reward ratio. I always keep reiterating this. It's not about how much you could potentially make, it's about how much you're willing to risk. And at the end of the day, if I'm in a position here where this has the propensity to go up, I don't even know how far I can go up to here for all I know, that's 600 pips, and you're risking 100 pips, then that's a 6-to-1 risk to reward ratio. It's worth taking, because if you're wrong, you're only losing 100 pips, and if you're right, you can gain 600. So that's really a favorable ratio. So yeah, I'm kind of focusing on these stocks for now, just because of the way the the current climate of equities is right now with the trade wars. It's making it hard to do longer term swing trades. So I'm looking at more short term swing trades where you can still profit, but you can get in and get out really quickly. But yeah, it's me, Any, aka the Noctrader, signing out.